Today's Asian session was unfolding sluggishly amid the release of the non-farm payroll report in the United States. The subdued trading activity was also due to the lack of news on the US-China trade deal. Besides, market participants are rather skeptical about the success of a trade deal between the two countries, despite positive comments from the US negotiators. The US dollar remains under pressure as traders doubt that today's macroeconomic statistics will be positive. The US dollar index, which tracks the greenback against the 6 major currencies, was down by 0.03%. In addition, Asian stock market indexes rose amid the expectations of weak US job report. If the US labor market shows a weak performance, the Fed is highly likely to cut its key rate again. The dollar-yen pair retreated to the level of 108.70. If the quote falls below the level of 108.50, the pair will continue its downward movement. In this case, the pair is expected to advance to the target level of 107.60 within the next week, especially in anticipation of the Fed's decision on the interest rate. The Fed Reserve will make an announcement on Wednesday evening. The Australian currency has gained ground. In the Asian session, the AUD-USD pair has settled at 0.6822, trying to regain its early highs. So, its next movement will depend on the non-farm payrolls report in the United States. If the indicator is in line with the forecast, the Aussie will dip 0.68. Payroll processor ADP data showed a contraction in the private sector job, and it's possible that the data from the Department of Labor will also disappoint investors. In this case, the AUD-USD pair is likely to consolidate at the recent highs of 0.6850. In the European session, factory orders data from Germany is due. In the evening, the University of Michigan Consumer Sentiment Index will be released. However, the employment data from Canada and the United States will be the highlight of today's trading day. And we continue to keep close tabs on market developments. Stay tuned. See you.